So far, we've seen 25 new billion-dollar startups on pace with last year, but a far cry from the boom days of 15 when 89 tech unicorns passed the billion-dollar mark. Our Deidre Bosa is at One Market with John Fort watching that today. Deidre?
Good morning, guys. That's right. These are the new billion-dollar startups filling the ranks that Snap, Blue Apron, Okta, and others have graduated from this year for, of course, the public markets. There's 25 of them total. They're valued at $37 billion collectively, according to PitchBook. Now, some of the American names include internet-connected fitness bike startup Peloton and health insurance firm Clover. And this year, guys, a ton of Chinese names that you may or may not have heard of, like bike-sharing startup Mobike and China's answer to WeWork, called Your Work. There's also Beijing-based news aggregation app Toutiao. It is the biggest of the bunch. It was valued at $12 billion, and that was the third largest VC deal this year behind Didi Chuxing and Airbnb. And what's interesting also is that virtually all of the companies on this list are based either in the U.S. or in China. Last year's list was far more diverse, with startups headquartered in India, Japan, Israel, and elsewhere. Now, in terms of the hottest verticals, though, for unicorns, PitchBook found that IT and B2C, business to consumer, have so far secured the biggest chunks of capital. These are the new names, guys, the class of 2017, but of course, plenty of existing and now aging unicorns staying private for longer, like Airbnb, Uber, and Pinterest. According to reports, Dropbox may be next to finally go public, and probably eyeing the performance of newly listed startups like Blue Apron and Snap that haven't fared so well in public markets lately. Guys?
Some really interesting numbers, Deidre, and I'm wondering, is the sense that this is a healthy realignment kind of at the unicorn end of the spectrum, or is this a slump?
I think that what you're seeing is bigger rounds. But less rounds. That's a trend we've seen over the last few years. But what's interesting is, according to data from PitchBook, this is shaping up to be the biggest year for unicorn IPO. So you are seeing some exits. We, of course, are seeing the IPO market pick up. But looking at the performance, it's interesting. You still had 5 this year, which is a good number when you look at the last few years. You're seeing more go public. And what do we say now here? As flat as the new up.
China has been somewhat on a startup tear, it seems like. And when I look at Didi Chuxing and the way they've managed to create this network across Southeast Asia and South Asia to benefit their interest, I wonder, is there somewhat of a realignment of China becoming more of a startup power, perhaps, relative to other overseas markets? You mentioned the U.S. and China are the unicorn kings this year.
Yeah, it's incredible what we've seen there this year. I mean, you had startups from all over, but literally it's every name on this list, 25, except for one startup that's from London. They're from the U.S. or China, but China has been a big player for years. I mean, Didi Chuxing is the second largest unicorn there is, right? VC-backed unicorn there is, just behind Uber. You've also got Xiaomi and a bunch of others, and there's a huge amount of money there, and you've got Western investors investing in them too.
Right. Eye-popping numbers. Deidre, thanks. Carl, Sarah, back to you.
John and Deidre, thank you for that. I'll turn to Mike and Rahul on this one. I mean, I don't know if it's the best time, Rahul, to mention Blue Apron. $8.12. That would be a really quick bear market.
Yeah, well, look, just generally talking about unicorns, I think that just looking at the space, you talk about 25 unicorns versus 3 times more, say, a few years ago. Look, the big thing is that capital is being doubled down on the key deals. VCs will go in and they'll double down on the deals that they really care about. And if they get 1 or 2 that go public within a year, it's a big deal for them. And as far as China goes, when I was at Microsoft Ventures, our Beijing accelerator was the biggest accelerator for growth and for value. When I left Microsoft Ventures, I think within 2 years, the portfolio was worth $4.5 billion, and that was mostly driven by deals out of China. So, I don't know. I mean, I look at some of these deals like Snap and Blue Apron and whatever, and I think it doesn't matter. Right now, you look at the stock fluctuations, that sort of thing. I don't think they're focused on that. I think they're really just focused on user growth and creating a great experience for their customers.
Yeah, or Mike, or just raising some capital, right? I mean, for a long time, the thesis was you can stay private for longer. Those markets are treating you well. Now you need to raise some money if you're having down rounds. You need a wad of cash to fight the onslaught of Amazon. Is that right?
Yeah, it's funny. I remember, you know, it seems like forever ago, and it was really just 2013, 14, something like that, where cash was flowing easy, and if you were a, you know, unicorn or some, I think there's a weird new term now called centaurs, which is like almost a unicorn. You would come by cash super easy, you know, from investors, and now I think they're sort of like Rahul was saying, tightening up a little bit more. You know, the heady valuations like before. It's not as easy to get, you know, multi-billion-dollar things with just a year of growth or something. So a lot of VCs are sort of putting more wood behind fewer arrows, and I think you're waiting for some of these big exits to make these funds successful or not. The one I'm really watching is Uber, and now after you've seen Travis Kalanick resign and the board sort of demand high-level executive appointments, including the CFO, now that's the IPO that everyone's sort of waiting for in the next year. And I think it's also this sort of like bellwether as to, you know, how everyone else is going to perform, and if they can keep this crazy valuation of, you know, nearly $70 billion when they IPO.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.